The nation's employers added 236,000 jobs last month, notching gains in almost every sector. February's broad-based tally surged past the 195,000 average pace of the previous 3 months, suggesting that amid a stop-and-start recovery, the labor market is off to a strong start in 2013. Surging stock prices, mending housing and labor markets, and a booming energy sector are among the tailwinds propelling the U.S. economy. On Friday morning, stock markets were up following the report, with the Dow Jones Industrial Average extending its record high levels. Recent benchmarks, including measures of gross domestic product, durable goods orders and others, reflect a recovery that is moving forward but at risk of losing pace as its main engine, consumer spending, is strained by higher taxes and gas prices as well as budget wrangling in Washington. Global risks, including recession in Europe and weakness in other U.S. export markets, also pose threats. The details of February's report reflect a jobs market that by almost all benchmarks is headed in the right direction. The unemployment rate fell from January's 7.9% to 7.7%, its lowest level since December 2008. That decline was due not only to job creation but also 130,000 individuals leaving the workforce. Average weekly hours and average hourly earnings both ticked up, and the employment-to-population ratio, which measures the share of workers to the entire population, held steady at 58.6%. The labor force participation rate, which looks at the share of the population that is working or seeking work, edged down to 63.5% from 63.6%. Mr. Whitner said that is likely to increase as job openings inspire more people to seek employment. The disconnect here is probably very temporary, he said. When we get to the spring, we expect the labor force participation rate to pick back up, particularly with all the jobs that we're creating in construction. Among the sectors that powered February's gains were construction, with 48,000 jobs, and healthcare, with 32,000. Retailers also added 24,000 positions, a vote of confidence that consumers will weather both the payroll tax increase and higher gas prices, and continue spending into the spring. Government continued to lose jobs, shrinking by 10,000 in February on the eve of the sweeping budget cuts known as the sequester, which was triggered late last week. The Bipartisan Policy Center, a Washington think tank, estimates the sequester could shave 0.5% from GDP growth in 2013 and cost the economy more than 1 million jobs over this year and next. Additional threats stemming from Washington include a possible government shutdown at the end of the month and a debt ceiling deadline in May. The full effects of the budget fights likely have yet to show up in the jobs numbers and could take a serious toll, said Ian Shepherd-Son, chief economist of Pantheon Macroeconomic Advisors. I don't think the economy is going to roll over, but I don't think there's much room for it to take a big hit and ignore it. If you're going to do a crazy fiscal tightening, it's better to do it on an economy with some strength than one that is very weak. The transportation sector also shed jobs, a drop that many economists attributed to weather. Seasonal factors may have damped the entire jobs tally for February, setting the stage for a bump up in March. The two surveys of businesses and households that yield the number of jobs gained or lost and the unemployment rate are conducted around the 12th of the month. This year, the surveys came on the heels of a blizzard in the Northeast, likely affecting the number of individuals recorded as working or seeing work. The ranks of temporary workers, often seen as a bellwether of hiring trends, surged by 16,000 after declining by 3,000 in January. Demand is up at staffing firm Manpower Group, although the conversion rate of temporary workers to full-time ones is flat this year from last, said Chief Executive Jeffrey A. Joras. That reflects companies' increased productivity, Mr. Joras said, with firms getting very good at making trade-offs and ensuring they have enough workers but not too many to handle the essentials. Companies hiring temp workers are taking the economic headwinds in stride, Mr. Joras said. Despite a flurry of domestic and international risks, businesses are getting a bit numb to the shocks that are happening to the system, he said. But they're remaining on high alert.